Welcome to The Spread. I'm Matt Rabel, here to go over the past week in options and finance news, and what a week it's been. Let me start off by asking you a bold question. Are the end times approaching? According to a Bloomberg story published December 11th, options traders are laying down positions to guard against downside risk like they're stockpiling canned food and weapons on doomsday preppers. I mean, if you follow any kind of news these days, it doesn't exactly seem like things are going well. For months, Bloomberg, the Wall Street Journal, and others have been publishing bearish market analysis pieces that project things like equity market crashes, negative interest rates, and recession 2 electric boogaloo. Now, I'm not going to make any kind of declaration one way or another as far as who I think has got it right, but all the negative buzz seems to have made an impact on options traders. ICE also launched its options contracts on Bakkt's Bitcoin futures on Monday last week. Volume was low to start. Most of it came from a single 10-contract block trade on Monday. Not wanting to be left out, the Singapore-based cryptocurrency exchange OKX announced that same day that they're jumping on the options Bitcoin bandwagon because why not? Everyone else is doing it. The exchange's official announcement read like an attempt to one-up ICE and Bakkt and probably the CME group, whose Bitcoin options are launching in January of next year. Now that ICE has broken the ice, so to speak, it seems like it's only a matter of time before other cryptocurrency platforms, your Binances, your Coinbases, your Geminis, start offering Bitcoin options trading too. Besides them, more and more people are dipping their toes in the crypto pool as well. Take MIAX, for example. Their holding company, Miami International Holdings, just announced that it has purchased an equity stake in MEEG Holdings, the parent company of MidChains, a digital asset exchange based in Abu Dhabi. We talked about how MIH seemed to be gearing up for a big crypto push a few weeks ago, back when MIAX acquired the Bermuda Stock Exchange, which MIH chairman Thomas Gallagher praised for its fintech regulation, particularly around digital assets. Seems like the crypto world might have another big player soon. Speaking of hedging and options, this week Cboe announced that it has acquired EuroCCP, Europe's biggest stock trade clearinghouse, a move that suggests Cboe is trying to get a strong foothold in Europe ahead of Brexit. They already had a 20% stake in EuroCCP, as did Euronext, Nasdaq, ABN AMRO, and the DTCC, but bought out the other company's shares to secure majority ownership. Our last story of the week is a bit of a downer, unfortunately, but I think it's worth talking about. The finance world lost a legend last week, Paul Volcker, a giant of a central banker as well as a man for whom the Volcker Rule was named. He died at the age of 92. Love him or hate him, the former Federal Reserve chairman was an influential economist who wasn't afraid to speak plainly about things he disliked, like inflation and default credit swaps, which he hated more than Anthony Scaramucci hated being the current administration's White House communications director. JP Morgan CEO Jamie Dimon told Bloomberg that he always respected Volcker, even though the two rarely agreed on anything. Former President Jimmy Carter said that Volcker was, quote, as stubborn as he was tall. Carter also said that even though a lot of Volcker's decisions cost Carter political points, he maintained that they were, quote, still the right thing to do. Our condolences to Volcker's family. For this week, that's going to do it. I'm Matt Rabel. This has been The Spread. Thanks for joining me, and till next week, happy trading.